There were comments from my colleague Jim Cramer last night on his show. He said that he's warning investors to keep an eye on growth stocks, to be a little cautious going into the CPI data. What are your thoughts there?
I agree with him entirely. I think the Fed has been very clear. We should expect more rate hikes. We should not expect any help from the Fed. Growth stocks, I'm actually quite bearish on growth stocks, so I have to agree with him on this one. I'm looking for places to hide, Seema.
Where would you hide right now? I've seen a nice mini rally in the industrial sector, one of my beats. Energy continues to outperform with WTI crude, or Brent crude rather, in the $90 range. What has piqued your interest right now?
I'm looking in the retail sector. I keep saying, and I've been wrong, I keep saying that energy is long in the tooth, but energy keeps working. It's probably one of the best performing sectors this year. But I think food, clothing, and shelter. So retail companies are going to be reporting next week. I'm looking at companies like TJX, which we own. I think they're going to have a good quarter. Not a cheap stock, yields 1.7%. Walmart is expecting sales growth of 5% and 9% decline in EPS. Target has been walloped. Target cut their inventory and the stock really took a beating. It is quite cheap. I think Target is one we've added to it, and it's one we are pushing quite.
For retail, I just remember back in the summer, it was Target that sort of spooked the market with this idea that it's sitting on too much inventory. But you're saying over the past couple of months, the CEO there has made the changes needed to cut costs, and where the stock is trading right now, you think is actually a good buy?
I think Target is a good buy here, and I have a couple of other ideas.
Walmart, you talked about TJX. What about Dollar General?
Dollar General, they've increased their outlook for fiscal 2022. They did acknowledge uncertainties with respect to cost inflation, supply chain dynamics, customer spending habits, but they are still projecting double-digit full-year sales growth. It's not cheap, but I think that's another one that's interesting.
You know, Kate, taking a step back, futures are indicated higher, but it was sort of a tough day for Wall Street, a 2% loss for all the major indices. And there was some talk in the 3 p.m. hour as we were counting down the close of this Binance FTX story, this debacle impacting the equity market. What are your thoughts there? Is there an implication there?
Yes, there's an implication there, definitely. I think it was a shock to everyone. This chap, Bankman-Friedman, whatever his name, was supposed to be a billionaire worth $24 billion. He really was the bulwark. So I think it's going to spook retail investors, and we're going to find how many institutional investors were also invested in this sector with crypto. So I think it's huge. I think it generally speaks negative things about the whole growth sector, meme stocks. But I think we are back to fundamentals.
Back to fundamentals. Speaking of fundamentals, I did also notice the dollar. It was up a lot yesterday. Do you think that played a role in why stocks sold off?
That is a good question. I think the dollar is strong because all the other currencies are so weak. I mean, where are you going to move your money?
Right.
The Fed is raising rates. The euro is in trouble. Look at the pound. They're really struggling with what happened with Trussonomics. So I think it's just a general trend that's going to continue. It's not going to go on forever. And the dollar has had these periods of great strength. But I would be 50-year high against the pound. It just seems a little overdone at this point. But people are looking for places to hide.